G'day folks, welcome back to another update. Today we're looking at Bitcoin and Ripple. Now both charts are showing bullish movement, but watch for that pullback. Before we get into the analysis, if you have questions around these daily videos, then reference the +1 videos identified by the +1 symbol, which break down these daily videos into simpler language. So looking at the outlook, as of today, June 10, Bitcoin is trading around $459,000, buoyed by strong institutional inflows, ETF adoption and macroeconomic uncertainty, with analysts projecting potential highs between $150,000 to $250,000 by year end. Meanwhile, Ripple's XRP hovers near $2.30, facing resistance amid profit taking and historical June weakness, though optimism remains due to potential ETF approval and increasing institutional interest. Both assets reflect a maturing crypto market, with Bitcoin leading as a digital macro hedge and XRP navigating regulatory clarity and adoption trends. So first looking at Bitcoin, we look at the long-term trends, and on the monthly here you can see the price is well above the moving averages, giving us a nice big bull run, and likewise the CCI is also above the moving averages, although notice it's pulling back towards that moving average range, so just be cautious of that. And if we dig deeper, I've also drawn this range, and that's a fair value gap range. And that basically means these are unfilled orders, and very likely we're going to see the price collapse into that range at some point. You can see here more recently on the monthly, if I just zoom in for a moment, we had a fair value gap here, and the candle there broke down and actually filled those orders with that bearish candle. If we zoom out a bit, you'll notice here we've got had another fair value gap, and those candles also with those wicks broke down into that range and filled those orders. These ones, however, have not been filled yet. And we need to, well, we not need to, but we're very likely in the coming months, and this could take years to play out, by the way. Not saying it's going to happen next month. It could take some time to play out. We may see the price collapse into that range possibly. So again, just be mindful of that. That's the monthly. On the weekly, first we look at the trends, and the CCI is above the moving averages. Likewise, the price. And again, we've got another fair value gap down there, which hasn't been filled. So unfilled orders down there as well on the weekly. On the daily, again, the trends first off, we look at the price above the moving averages. Nice big bullish candle yesterday, and today so far as well. The CCI has broken above the moving average band, was giving us a bullish momentum, so start taking long trades from here. However, we look at the lower time frames as well to be aware of any potential pullback. I'll go to the hour chart in a moment, but notice again we've got these other fair value gaps that haven't been filled yet. This one up here has been partially filled, I'd say almost 50% of them. But again, these ones down here haven't been filled, so just be aware of that potential retrace. Now, if we go to the 1 hour chart here, I've got the daily here as a reference. So you would have taken short trades during this period and started taking long trades more recently in the last few days. But looking here on the 1 hour chart, what we look for first off is any divergence, and there's no divergence currently in play. The last divergence we had was this bullish divergence. We had higher lows on the CCI versus lower lows on the price, and that bounced and hit our minimum target range at 23.38% Fibonacci. It fluctuated in that range for some time, then it finally collapsed. And again, on the hourly, we've got these fair value gaps. We've got a little one there, another one more recently there, and this other one down here. So again, also if I zoom in, you'll see there's another fair value gap identified there. And that price, or those candles, are already starting to break into that range, almost near the 50% retrace level. Now, if we go to the back tests for Bitcoin, you would have started taking short trades during this period back here when the daily broke below the moving average. And what I've got here is the stop loss approach, and here I've got the average down approach. And you would have stopped taking those trades once you start seeing that CCI break towards that moving average range. And that equated to about this period back here. The stop loss approach, you would have been down about almost $200. Our baseline there is $100,000, and you would have been down about $200. And the average down approach, you would have been down approximately in that range there, somewhere around about $12,800 up in terms of gains. So the profitability started dropping off. So you still would have made it, had you traded during those periods, with the average down, you would have made about $12,000 in that range. So again, you start taking long trades from here and no short trades. So for Ripple on the monthly, it's above its moving average range, giving us a bullish momentum, and currently it's a bullish candle so far this month for Ripple on the monthly. On the weekly, however, it's broken into that moving average range of the price, and the CCI is already broken below, so somewhat neutral to bearish momentum at the moment on the weekly. And on the daily, looking like it's going to break to the upside soon through that CCI range. It's currently in that moving average range. It's already bullish or somewhat bullish on the price, and the CCI is sort of still hovering in that moving average range, so somewhat neutral positioning so far on Ripple on the daily. Now, if we go to the intraday chart, the first thing we look at is any divergence. We look for divergence on the other time frames as well, which haven't appeared yet. But on the hourly, you can see here we've got a bearish divergence, lower highs on the CCI versus higher highs on the price. And back here we had the more recent bullish divergence similar to Bitcoin versus lower lows on the price, and that bounce hit our 23-38% range. Now, in terms of measuring where this is going to bounce or retrace to, we take the Fibonacci back to that significant low before that divergence started. Again, the CCI is dropping off, and so is the price, and very likely we're going to see the price come into that 23-38% Fibonacci range. That's a minimum, and more than 90% of the time it hits this minimum range. Of course, it could go a lot further, so we'll just keep an eye on that. We'll take it one step at a time. But at the moment, probably hold off going long or short until we see a more definitive move on the daily. So far, it's breaking long on the daily, but the CCI is still somewhat neutral. And considering this bearish divergence, I'd say it's probably going to fall back to the downside possibly, so we'll keep an eye on it in the coming days. So if you're new to trading, we're now including a video series, Pete's Investing Plus One, as part of the Pete's Investing channel. The Plus One videos are a dumbed down version of our strategies and give you a better insight into our analysis and help you follow our daily videos. If you enjoy the content, subscribe at least on a free trial to my Patreon page, where I publish weekly bullish shares across various regions of the world's markets. Thanks, and talk to you in our next video.